As Lightning McQueen famously said in 2006, I am speed. The words heard around the track, but with every race car comes a legacy that follows. My name is Vedant Singh, and I'm here with,
Acharya.
and we found the legacy of a lifetime that'll take your investment and transform it to the next level. This is Extra, MBG, more commonly known as Mercedes Benz.
So let's talk about what Mercedes-Benz is exactly. A quick overview. Mercedes-Benz has a 57 billion euro market cap, a 5.73 profit to earning ratio, and a 150 billion euro enterprise value. But let's go a little bit deeper. More specifically, the company itself focuses on a number of industries. Automotive industry is one of them, but they also have EVs, luxury goods, defense, and many subdivisions within each of these. The valuation of the stock price at the creation of the report was 59.97 euros, and we target 81.52 euros. This is a 35.93% increase, which, when crossed with its 57 billion euro market capitalization that I mentioned earlier, isn't that hard to fathom. All of these factors considered, plus many more that we're going to discuss, we strongly suggest a buy.
Mercedes-Benz operates as a diversified mobility company with three core business segments: premium automotive, commercial vehicles, and mobility services. The company maintains production facilities across 17 countries, with particular strength in Germany, the United States, and China. Under the current CEO, Ola Kalinis's leadership, has accelerated its strategic transformation toward electric mobility and digital services. While CFO Harold Wilhelm has implemented rigorous cost discipline, the company's financial resilience is evidenced by 150 billion euros in 2024 revenue, demonstrating recovery from prior supply chain disruptions.
But let's look into the insights of what makes Mercedes so successful. This right here is the Mercedes-Benz car strategy, published by Mercedes-Benz themselves in their income report in 2022. These six pillars govern their understanding: think, focus, expand, embrace, lead, and lower, which, when built on their foundation of sustainability, integrity, and diversity, allow them to dominate the international market. Specifically, they're able to outsource production to a lot of different areas. All across Europe, they have parts of their engine manufactured, but they also have sales and manufacturing in a lot of other countries, like in South America, in Argentina, in Africa, like in Egypt and South Africa, and all over Asia as well. This way, they have distributed liabilities. So if one goes down, the whole company doesn't go down with it. If we go deeper into their financial statements, we can see that between 2024 and 2023, there was a significant growth. This growth is most important because it demonstrates that Mercedes-Benz's revenue and income is growing at a much faster rate than their expenses are growing at. And that's what's important to take away here, is that Mercedes-Benz is a model, or it's a business model that grows at a faster rate than it expends money at. And because of this, it's able to not only be profitable, but dominate competition because it's able to be more and more profitable every single year. And it's undervalued because of this exact concept, which we'll go over in just a second.
In the global premium automotive sector, Mercedes competes primarily with BMW, Audi, and Porsche. While BMW leads in total revenue at 160 billion euros compared to Mercedes' 150 billion, Mercedes maintains superior profitability with an 8.6 EBIT margin. The company's 10 billion annual research and development investment exceeds Audi's 6 billion, funding critical initiatives in electrification and autonomous driving. Notably, Mercedes' price-to-book ratio of 0.9 suggests potential undervaluation relative to Porsche's 1.2.
Now, Mercedes doesn't just believe in the future, it creates it. And how does it do that? With its relations with AI. Mercedes was one of the first companies to get AI approved, with their autopilot system being developed for many, many years now. Mercedes is very heavy into R&D, so this isn't a problem for them. They target EVs strategically, and they use it as strategic positioning, which we mentioned several times in the report because it's so important towards Mercedes' business model. They strategically target EVs and EV sales because they grow so fast. Finally, they use partnerships with companies like NVIDIA or AMD in both Formula One, which is their primary entertainment income, which is how they commercially distribute, and their road life to allow for AI integration into their cars moving forward easier and easier. This allows Mercedes to dominate the AI market as they go further into the future and have a significant edge over their competitors as well, which allows them to scale to a higher profitability.
Mercedes has established industry-leading ESG credentials through its Ambition 2039 initiative, targeting full carbon neutrality across the value chain. The company ranks in the top percent of global corporations for ESG performance, with particular strengths in clean technology development and workforce diversity. Operational achievements include a 50% reduction in per vehicle CO2 emissions since 2020 and 40% female representation in management positions, double the automotive industry average.
Now let's look at the dividend discount model. This is where we get our undervaluation from. As you can see from this chart, the WACC is 3.83%, and the average growth rate of the company is 9%. When we took this dividend discount model, the price of a share was 61.28 euros, and its intrinsic value was 142.7 euros. Not only does this mean that there's a 10.68% upside potential, it means an undervaluation of 56%. Yes, you read that correctly, 56. And that's why this is such a great opportunity for investors, because it's a company that's growing and it's growing fast. And this is an opportunity that you can seize now. Now, of course, every investment has risks, but Mercedes has you covered. Let's talk about them. These are the three biggest risks that Mercedes faces today. First, tariffs and trade policies. They're going to happen regardless, as we've seen, especially in the US. However, as I said earlier, Mercedes is able to distribute international production, so it's not actually a big deal. Even though it's very likely to happen, the severity is low. Next, entrance of new competitors. While new competitors are definitely a problem if they were to successfully enter, the likelihood of it happening isn't that high. And the reason is because Mercedes is so well established that there's a lot of other well-established competitors that struggle to compete with it. So it's very difficult for billion-dollar companies to emerge out of the ground and promote successful EVs. Lastly, rising engine costs and all sorts of efficiency and optimization costs are definitely challenges that Mercedes faces. But because of its distribution, mitigation, and outsourcing and its superior efficiency model, it's able to significantly reduce the COGS expense. These simple incomes are just an extension of the previous ones that we said. But now knowing all that you know, I'd like you to take a look at this and see just how heavy the impact of the EV market in the future is on Mercedes. It's strong, and it's so strong, in fact, that Mercedes is able to not just pave the way to the future, but redefine it entirely.
Mercedes-Benz possesses a structural competitive advantage across all five forces of industry competition. Barriers to entry remain exceptionally high due to capital intensity, over 1 billion required to develop a competitive vehicle platform, and Mercedes' entrenched brand equity in luxury segments. Supplier power is mitigated through strategic partnerships, including semiconductor agreements with Infineon and vertical integration in battery production, targeting 80% in-house cell manufacturing by 2025. Buyer power is minimal, evidenced by 68% customer retention rates, 14 percentage points higher than BMW, and a 50% leasing penetration that ensures recurring revenue. Substitution threats are limited in premium segments, particularly in key growth markets like China, where luxury automotive demand is expanding at 12% annually. As for the competitive rivalry, while intense, it favors Mercedes due to superior margins. 8.6% operating margin is what Mercedes has, versus Tesla's 7.6%, and their forthcoming MMA platform, which reduces production costs by 15%, while still manufacturing premium pricing power. In summary, Mercedes-Benz combines brand strength, supply chain control, and technological leadership to sustain long-term competitive differentiation.
This is our EPS, our primary method from which we derived our valuation. The quarterly EPS shows conservative growth rates, but signals that come off of this chart show spiking growth rates, which allow us to see the resilience of the company. The trailing EPS shows that Mercedes has momentum, and it's moving fast. And finally, year-on-year quarterly growth shows that even after recessive conundrums, Mercedes is able to rebound and isn't able to, and doesn't take that heavy of a hit when they do face recessions because of their distributed production. All in all, our financial thesis is that Mercedes-Benz Zetra MBG is a strong buy to hold for Q4 2025 because when Mercedes moves, the whole world moves with it.